Recording's going.
Wonderful. Well, welcome everyone. So grateful to see you all. Absolutely delighted to bring this conversation, this very important conversation, to the membership of the Colorado Mortgage Lenders Association. My name is Christine Jensen. I am a Senior Vice President at Fairway Home Mortgage in the Reverse Lending Division. And this past year, I had the privilege of serving as the vice chair of the CMLA Advocacy Committee. The board of directors at the Colorado Mortgage Lenders Association has identified some of the highest priorities for our organization, which impact our industry. And right at the top of the list of the priorities that the board of directors identified after meeting with membership was this advocacy function. And the role of advocacy in our industry is a really, really critical need that the CMLA serves. So it's really important work that we do. And let me explain. Most of you know that our state legislature and Congress was set up as a citizen legislature. That is, that by design, the founders had thought, let's get citizens from all walks of life into this role of lawmaking and rulemaking, and have a lot of diversity of opinions. Well, there's good and bad to that. The drawback is that those that make the laws that govern our industry don't always know exactly how the impact will be when they make a law. So it's really important that our industry and other industries stay extremely involved in the lawmaking process so that we can tell our legislators, hey, this great idea that you had, or maybe this not so great idea that you had, here's how it will play out, and here's the impact that it'll have, not just on our industry, but on the consumers of our industry. So, with that, I'd like to introduce somebody who has been really, really key to the work that we have done in the state legislature in particular, which is the purpose of our conversation today. Dieter Ramdonk has been the lobbyist for the Colorado Mortgage Lenders Association for many years. We're very fortunate to have somebody of his caliber with his background, his training, and very importantly, his contacts when it comes to understanding what is going to be most impactful for our industry and helping us create those relationships and facilitate those conversations. Sometimes it's to pat a legislator on the back to say, thank you, that was a job well done. Sometimes it's to call a little time out and say, hey, wait a minute, before you go too far with this, let's have a conversation. So, with that, I'd like to turn our conversation today over to Dieter Ramdonk, who will give us an overview of what in the heck just happened at the Capitol this past year.
Thank you, Christine. Good morning, everybody. Thanks for joining today. I want to start by giving a shout out to the Terry Jones. I see Terry on screen, a celebrity amongst the mortgage lending industry here in Colorado. I got my start actually representing CMLA a little over a decade ago with Terry and Mike Rosser. We had lunch at the Palm, and they took a chance and hired me to represent the CMLA. So thanks, Terry. Good to see you. Maybe we'll start real quick. Just to kind of get a sense from folks, if we can use the raise the hand feature, how many folks have attended a legislative discussion or have some sense of how the legislature works, background info, just so we can kind of, figure out how much detail maybe we start with just to give some background. So raise a hand if you've attended one of these and kind of know how it all works. Okay, I see some hands. Okay. Okay. You can put a dislike hand up too, because that's how I feel most of the time with the legislature. So I understand that as well. Okay, great. Well, let's dive in. We, as in a just a little sort of preview of the agenda today, I want to give just a little bit of background information, a little bit of history of the session, and sort of context for the legislature, so that you all can understand kind of the environment that we work in down there. We'll talk a little bit about some of the big picture bills and issues that came through the legislature this year, just to kind of let you know what was really top of mind for those folks. And then we'll dive into the bills that the CMLA was watching this year. Um, I won't go into too much detail on every bill, but there's, I think, a few important ones that we want to highlight and give you a little more information about. So, the first thing we'll do, though, we can use the chat feature perhaps. I want everybody, if you don't mind, to take a guess. How many bills, memorials, and resolutions? So, bills are the ones that become laws. Memorials are what they sound like. Somebody's passed away or something like that, and they want to acknowledge them. And the resolution is just sort of a letter to Santa, really. It's the legislature, resolving to say something, but doesn't really have the force of law. So, but all of them get introduced and debated and voted on. So, how many bills, memorials, and resolutions did we have in the 2026 session? Oh, Brad's close. Okay. 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 Close. A little high. Okay. So this year we had 714 bills, memorials, and resolutions. Dave, you were right out the gate, pretty close. 448 of those bills did pass the legislature, and 12 of those bills were vetoed by the governor. So 436 ultimately became law. So just very briefly, high level, the General Assembly, as Christine mentioned, it was created as a part-time legislature. So what that means is these are folks that tend to have other jobs outside of the legislative session. They're doctors, lawyers, nurses, farmers, ranchers. Um, we don't really have any mortgage lenders. I don't think we've had some mortgage lending adjacent folks. Um, but that also means that they are not experts in a lot of these subject areas. Bills are suggested to them by constituents or by lobbyists or other members. And typically they don't have a ton of background in the space, but they tend to get some expertise on that issue and get going. Um, we have 100 legislators at the state capitol. There are 35 in the Senate and 65 in the House. The legislature meets for 120 days every year, so it's about mid-January, give or take, to mid-May, give or take. The legislature can call itself back for a special session outside of those 120 days if there's something that pops up and or they didn't get quite right during session, they can come back. What happens much more frequently, though, is the governor will call them back and say, "Hey, there are three things I want you to address in a special session. Here they are." And the legislature goes back and they can pass those bills and send them to his desk, or they can not. AI is the prime example of a special session that was called in part to address AI last year, and the legislature just could not get it done. But a little foreshadowing, they did get AI done this year. So specifically, we have in the legislature, I mentioned 65 in the House. There are 43 Democrats in the House, and there are 23 Democrats in the Senate, and all of our constitutional offices are held by Democrats at this point. So the state, historically had been somewhat red, somewhat purple, and now it's a pretty dark shade of blue. We do have an election year coming up. I don't know how many folks have turned their TV on and seen ads all over the place. I would suggest that, maybe you want to turn your TV off as we get close to the primary here in about a week and then close to the general in November. You'll be inundated with ads. So, as I mentioned, 714 bills. Obviously, not all of those are going to impact the lending industry. And so we have a process at the CMLA. We have a Legislative and Regulatory Affairs Committee. As Christine mentioned, she co-chaired that this year. That's really a volunteer group that devotes their time and expertise to review bills and just, kind of have a discussion about whether they're going to be impactful to the industry, and if so, whether we need to support it because it's a good bill for the industry, whether we oppose it because it's a bad bill, or, if we need to amend it because there's some issue with it that we need to fix. And then our actually most frequent position is a monitor position. So it's a bill that, has some impact on the industry, but Maybe not, directly consequential one way or the other. And so it's something we just want to watch to make sure, that it doesn't go sideways, or if it goes in a good direction without our asking that, we want to know about that as well. So the chair of the Legislative and Regulatory Affairs Committee and I look at every bill that's introduced, and then the ones that we think maybe have some impact or could have some impact, those will be referred to members of the committee, kind of based on their expertise. And then when we have our meetings, they will say, yes, this bill is great. Here's why, and I think we should support it. We'll have a discussion. We'll vote on that. Opposite, obviously, if it's a bad bill. And then, again, we get into the amendment discussion if it's something that somebody says, hey, this is okay, but here's a concern that I have, or hey, this is good, could be better. Then my direction is typically to go to the legislature and try to amend those bills in, whatever way that the committee recommends. So big picture, what do we deal with at the Capitol? The one thing the legislature is required to do every year, really in 120 days, they could run one bill and be done. It never happens, of course, but it'd be exciting if it did. And that is the state budget. We're required to have in Colorado a balanced budget every year. So they must run a budget every year. We were facing about billion and a half dollar deficit going into this legislative session after having about $1 billion deficit during the special session last summer. That's really the result of a couple of things. One, the main driver of that was the one big beautiful bill made a lot of tax policy changes at the federal level that kind of trickled down and had some impacts in Colorado. We have some structural challenges with our budget in Colorado. We have a TABOR, the Taxpayer Bill of Rights, limits the amount of revenue that the state can keep. And we have some obligations that the state just has to pay for, namely K-12 education. They're required by the Constitution to spend a certain amount on K-12 education. We expanded Medicaid years ago, and the cost of that has just skyrocketed above the projections that the legislature had when they made some of those decisions years ago. So they're obligated to spend some of that money. They, after COVID, had a bunch of federal money that was kind of sloshing around that they decided to spend, and they obligated that spending for new programs that had ongoing spending obligations, even though that was kind of one-time federal dollars. So a lot of programs that, had obligations and they were obligated to spend on, that they just created a couple of years ago, they had to find ways to pay for. And so they did, in fact, balance the budget. It required a ton of effort from the Joint Budget Committee. They used sort of all the one-time tips and tricks they could find, like cash transfers, things like that. There was a hiring freeze that the governor instituted. Departments were required to cut some percentage based on which department it was. They did some provider rate changes in the Medicaid space, really just kind of nibbled around the edges as far as they could, and then did make some cuts to those departments, like I mentioned. And one thing I want to note for everybody when you get your ballot this year, it's going to be incredibly lengthy, not only with the candidates on there, but all of the ballot measures that are being proposed. The legislature did refer a measure to the ballot that would ask voters to allow them to raise the TABOR cap, which means that voters, if they said yes, would allow the state to keep and spend more money rather than refund that to the taxpayers through the Taxpayer Bill of Rights. So you'll see that on your ballot. I suggest you pay attention to that. Other bills, though, not outside of the budget. So I guess I should say the budget was kind of the main driver of the conversation. Budget determines obviously how much they have to spend in a given year once they kind of get rid of all of their obligations, K-12 education, Medicaid, things like that. Then they decide how much general fund money is available to spend that year. We had very little, and depending on who you ask, no general fund money this year. And so, really, every bill that was introduced with a fiscal note either died or had to be substantially amended to take out the spending or limit the spending or put it to off years, things like that, to address the fiscal note in order to get it through appropriations committees. So the budget was, even if you weren't talking about the budget itself and you were running different bills, the budget was a huge part of every conversation down at the legislature this year. Other bills of interest, consumer protection, for the last couple of years has been a big topic. And that's everything from tenant protections. Still are seeing a lot of landlord tenant, eviction type legislation. Surveillance pricing was a big one. We'll talk about that in a minute, but kind of protecting folks from individualized pricing based on their behaviors. We did see a few gun bills this year. We see those kind of every year. We saw some immigration bills, largely in response to kind of what's happening at the federal level. The legislature did undertake one effort for sure that did pass, and then one that did not make it through. But sort of efforts to address what will come on the ballot, things that perhaps the majority Democrats at the legislature don't really love and don't want to see pass. One of them was what I would call sort of a preemptive strike on a transportation funding measure. There's a group collecting signatures to prioritize transportation funding in the budget. And so the legislature passed a bill that basically says if that passes, then what will happen with funding of other things. And then there was a push in the last 5 days of session to do the same thing on a natural gas measure. We're potentially going to see a measure on the ballot to put the right to use natural gas in the Constitution. And there were some groups that were unhappy about that measure because it's very, very vague. And so they tried to get the speaker to run a bill that essentially said if that passes, then status quo protections for natural gas will remain. That measure did include sort of much broader pieces to it, and ultimately that did not get through. But it was interesting to see the legislature on a couple of times essentially try to get ahead of the voters and say, we'll pass something that is contingent on a measure passing by the voters. So kind of big bills, big picture. We'll move to the CMLA bills. So as I mentioned, we look at every bill. Um, and obviously, a huge majority don't impact the industry. I mean, we see, license plate bills or water bills, all sorts of things that don't really have a direct impact. But this year, we took 20 positions on 23 of those 700 bills. 13 of those bills were what I would say are active. That is, we supported them, opposed them, or tried to amend them. The other 10 were bills we monitored again because, perhaps it was related and something we wanted to keep an eye on, or the title is very broad and something could be amended into it, or, just something we want to be aware of that's going to pass. So I'm going to start with the bills that we supported. Again, I'm not going to go into detail on all of these, but I do want to highlight a couple because I think they're important to kind of get a sense either because it's an issue that's going to come back or because we were heavily involved or, like I said, it's a good bill for the industry that we decided to support. So the first bill I want to mention is House Bill 1308. This was an idea that was brought to us by the bill sponsor and really the governor's office was incredibly involved in this. And so we were asked for feedback and some suggestions for this bill prior to introduction. It would have created a streamlined process for local governments to approve a lot split. So imagine a landowner has, a fairly good sized lot and they want to split that so they can sell part of the lot for development. Rather than have to go through, a traditional land use process with their local government, this would have created basically a streamlined process that would almost sort of be a check the box type of situation. We heard the concept, and we and the Bankers Association basically said, okay, however, we need to make sure that the landowner gets written, notarized consent from the lien holder, and that consent is recorded. And we also suggested that if the lot was split prior to that consent, then the lot split is void just on its own. So the landowner doesn't have to go backwards and spend, a fair amount of money undoing that process. All of that feedback was included in the bill. And at that point, we decided to support because, we thought, number one, housing is a good thing. More housing is a good thing. And number two, we were very appreciative of both the sponsor and the governor's office, including us very early on in the process and taking all of our feedback. So we did vote to support that bill, but unfortunately did not pass. It made it out of the House, but then was killed in a Senate committee. Local governments had some concerns about, putting that process in statute. But I expect, having spoken to the bill sponsor, that bill will probably be back next year. There was a bill to by CHAFA or through CHAFA that would have given sort of cheaper loans essentially to first responders and other folks like that. That bill did make it through, and it was signed by the governor, so we did support that bill. A couple of bills on affordable housing just to essentially make affordable housing funding easier to get and streamline the process through the state government so that they could have a little more flexibility to give that funding. We supported that. Um, We saw several bills in the insurance space. I think everybody's aware that property insurance, residential property insurance in this state is getting more and more expensive and frankly unavailable in a lot of places. And so there were a couple of bills in that space this year, one of which we supported. Initially would have allowed individuals and HOAs to be eligible for grants from a fund that already exists for natural disaster mitigation that currently goes to local governments and nonprofits. This would have gone to individuals and HOAs to get some of that money. The bill was amended instead to create a program where folks could get a tax deduction for contributions to their own catastrophe savings accounts. So somebody could create this account, they could put money in it, get a tax deduction for doing so, and essentially be money available for kind of what it sounds like, that roof repair or some kind of repair to a home after a natural disaster or weather event. That bill did unfortunately die in committee, but we did support that because we thought that was a good way for homeowners to protect themselves. Um, Finally, one other bill I want to mention that we did support created the Adults Security and Safeguard from Exploitation in Transactions Act, or the Asset Act. And this bill basically either authorizes or requires a qualified individual at a bank to just perform certain functions if they suspect that a vulnerable adult, typically an elder adult, is the victim of financial exploitation. So, depending on the circumstance, that qualified individual at the bank would be required to notify law enforcement or adult protective services, or delay disbursements if a request was made and they thought something fishy was going on. It would have given them the power to say, hang on for a second, we're not going to do that quite yet. We initially looked at that bill and said, great concept. Want to make sure that it doesn't run afoul of any federal obligations that a lender may have to make a disbursement after a request is made. And the folks running that bill came from the credit unions. They were very amenable and said, yes, we will absolutely make that a may. So, sort of in the most often probably the reverse lending context, it's a may in that bill. So a banker is not required to delay a disbursement and thus, risk being contrary to federal law and regulation, but rather they're allowed to do it if circumstances permit and it's the right situation. So. Those are the bills we supported. Generally, there's a few more in there, but kind of those are the bigger ones. We shockingly, somewhat shockingly, only opposed two bills this year. I think, frankly, that is a recognition that this General Assembly is a challenge in a lot of ways. It's incredibly progressive, and a lot of those progressive ideas don't necessarily jive with, business practices generally. So, it's easy to say that's a bad bill, we're going to oppose it. I think, frankly, what has to happen more often in the sort of political lens is to take an amend position and try to fix a bill that we find challenging or concerning. But there were a couple of bills that I want to note that we said, these are just bad. There's no fixing this. We have to take an opposed position. And I'm going to pause there. And I see a question. Before we talk about opposing bills. Uh, the Asset Act, Becky, 1110. Yes, it did pass. So the bills we opposed, there were two of them. One of which came from a member who was trying to incentivize housing development. It's House Bill 1119, and this is sort of more in the stick rather than carrot, or I guess potentially carrot, depending on how you look at it. It would have allowed a local taxing entity to impose a lower mill levy on improved land as opposed to vacant land. So the idea being you're going to pay more in taxes if you have vacant land that you're not developing, again, to sort of incentivize or, compel you to develop that land so as not to have a higher tax bill. We joined with an enormous coalition of folks opposing that bill. That included the realtors, the assessors, there were cities and counties, home builders, chambers of commerce, the Land Title Association, the Apartment Association, and many others to oppose that. We said, increasing tax rates on land is not a good idea. And we had a bunch of data from the assessors that would show that even folks that had improved land would have potentially paid higher taxes than unimproved land next door, depending on the mill levy breakdown sort of in those local taxing jurisdictions. And so we just thought this was a bad bill all around. And so we opposed it. And I'm pleased to say this did die in committee. Again, there were just so many voices in opposition, and frankly, not a lot of folks saying good bill, vote yes to that. Another bill we opposed, this was in the landlord-tenant context. House Bill 1106 would have created or improved a lot of protections for tenants at the severe detriment of the landlords, frankly. That would have specified, among other things, that there could be reasons in statute that a tenant could be excused from filing an answer to an eviction complaint. Those reasons would include, I'm going to list these because it's really interesting. They want to put all of this in statute as sort of an automatic reason for a late filing. A hospitalization, a sickness or injury, a reasonable accommodation request for disability, a lack of proper service, a transportation issue, a complication related to electronic filing that was reasonably outside the tenant's control, and a court issue that was reasonably outside of the tenant's control. So somebody can say, I had a flat tire and therefore couldn't answer the eviction complaint, and therefore I'm excused from failing to file in time. Essentially, a court would have to automatically grant that excuse. And so we thought that was troubling. The bill also would specify that if the tenant was affected by one of these specified reasons, again, I'm going to list, then the court would have to follow certain actions. They could relieve a tenant from final judgment, vacate any judgment or writ of restitution that was issued, and provide the tenant with a reasonable amount of time to file an answer, permit additional amended pleadings, and extend the trial date. So this really would have shifted the balance in favor of tenants facing eviction quite heavily. This isn't one that's directly impactful to residential home lending, but we know there are folks that have a mortgage on their house and rent it, or maybe they're commercial lenders that lend in that space. And so we thought this was important to the industry and join others in opposition. And I'm pleased to say that died as well. So the two bills we did oppose did end up dying this year. I'll pause there, actually see any other questions in the chat, or if you want to unmute and ask before we head to the amend positions.
Dieter, I think we had three that we opposed. Was I off on my count? 1210 surveillance.
Oh, 1210, we had an amend position.
Oh, okay.
And so yeah, we'll get to that one.
Okay.
That's one that I'm gonna just
Okay.
give you a little bit of
That's a whole
excitement.
different thing by itself.
Yep, and that one was a win-win. Actually, I'm gonna call it two wins, which you don't really have at the legislature. Yeah, but thank you, Christine. Good catch. So bills we took an amend position on again. There were a lot of times that folks said, I hate this bill, bad bill, and we said for political reasons or reasons of actually wanting to get things done, that perhaps an amend position would be more appropriate. And so the first one I want to note is Senate Bill 148. This is a bill dealing with on-bill financing. So essentially would allow customers to get some money to make energy improvements in their home. So it may be energy efficiency improvements like better windows, or perhaps they want to upgrade their furnace, or things like that cost a fair amount of money up front, but ultimately would save money down the road. This would have borrowed money from the Unclaimed Property Trust Fund. So I'm sure all you folks are aware there's a huge bucket of money out there that essentially belongs to individuals that they, for one reason or another, don't claim. And so the money sits there. And so the legislature, again, we talked about not having any money available, said, aha, huge bucket of money. We can just borrow from that. Which, side note, concerned a lot of legislators right out the gate. They said, that's not our money. We can't take that. But, so that's one hurdle that sponsors of this bill had to overcome. But this would have essentially transferred, I think it was $50 million or something from the Unclaimed Property Trust Fund to the Governor's Energy Office or the Colorado Energy Office to pay for these residential home improvements. And then folks, once they got their money, would essentially have a charge on their utility bill every month to pay that money back. And so we and the bankers, again, were involved in this conversation, raised a fair amount of concerns initially, including how much can somebody borrow? I mean, could they borrow $100,000, $200,000 and really go to town on their home, which maybe improves the value and is great, but that's a ton of money they're going to have to repay. Does borrowing this money constitute a lien on the property? And if so, what is the priority of that lien? How is that lien recorded? How would, future buyers know that this lien exists? Would that obligation remain with the property if somebody wanted to sell it? Does the lien stay on the property? Does the lien follow the homeowner since they're the ones that obligated themselves to that money? What happens in a refinance situation? Does it have to be paid off right away if it's not a property transfer, but it's a refinance of that loan? Do they have to pay it off before they can refinance? So we kind of made some headway getting these questions answered. The realtors were also heavily involved in this conversation. There was some dissent in the industry. Some wanted it to be a lien, some did not want it to be a lien, some wanted it to be a essentially tariff-based repayment obligation, which is not a lien, but it sure sounds like a lien. And so we were in a heavy discussion, heavy negotiation on this bill, but ultimately it did die in committee. I think there was just a lot of unanswered questions, and there was a fair amount of concern from legislators just broadly about, again, taking a loan from the Unclaimed Property Trust Fund. So this is the, I think now second year they've attempted this bill. This was kind of a priority of the Polis administration. I don't know to what extent the next governor maybe has the same priority, but as Terry always, was fond of mentioning, no bad bill ever goes away. They always seem to find a way to bring them back and have a brand new idea to make it better. So I would expect to see this bill again, but I think we positioned ourselves well to be involved in that conversation early on. Um, we did have a couple of bills dealing with one from the treasurers, one from the trustees regarding tax lien sales. We suggested a number of amendments to the bill. These were not intended to be, massive policy changes, but really, modifications, updates, tweaks, changes, things like that. And so in good faith, they asked and we provided some feedback for some amendments that would improve the bill. And so we did get those amendments and were successful there. Um, Surveillance pricing. Let's jump into that one because that's again a win-win, and then we'll go to AI because that's sort of a win question mark. So surveillance pricing, House Bill 1210, was a bill intended to deal with a situation where somebody potentially is paying a different price than their neighbor or someone else in the state, just purely based on what is sort of observed or inferred about that person's behavior. So think about the example that the proponents like to use is, you're sitting on the couch and you're going to order oat milk. And your spouse is sitting next to you and they've been Googling, 10 different varieties of oat milk. And so perhaps their price of oat milk is $1 more than your price of oat milk because you just started the search for it and you're the first one out the gate. They thought that was unfair. They also liked very much to refer in the airline context. If you are, I'm sure everyone's done it, you search for a flight, you forget about it, you go back to it a week later and the price is different. They believe and wanted to try to fix that situation because they say that companies are sort of unfairly setting individualized prices based on your, online or electronic behavior. I'm not going to go into the airline situation. I also represent an airline, and I'm not going to tell you how we felt about that, but you can guess we had some issues. But so we looked at this bill, and initially it did include a provision that said if you were making a decision based on a credit report, that is sort of not included in the bill. That's exempted from the bill. We said that's great. However, there's still other underwriting practices, review practices that, perhaps don't look just at a credit report, but would make credit determinations, lending determinations, pricing determinations based on what is observable behavior. So, that could include somebody who is applying for a loan and has, W-2 information from 5 different employers in a month because they jumped around on their job. And so you say, okay, well, maybe they're a little bit more risky, so maybe the price is going to be a little higher. Is that observable behavior because they, jump from job to job? Probably. Are you making an individualized price based on that behavior? Yeah. Would that be prohibited under this bill? Yeah. So we said, things like that are challenging. Um, we suggested an amendment to that bill, and were asked by proponents, what we could do. It got out of the House and then was slated for death in the Senate. Proponents did go around asking folks, what amendments would it take to get you to be neutral on the bill? We essentially negotiated over several conversations and frankly, frantically in the last about week of session, sort of agreeing at 6:30 a.m. to have a 7 a.m. call type situation. We agreed to an amendment that would have exempted transactions by a mortgage broker, mortgage lender, mortgage loan originator, mortgage company, or mortgage lender. I already said that. Essentially taking the mortgage lending industry out of the bill. So we did get that amendment and we did go neutral on that bill once that amendment was adopted. And so I'm going to call that a win. We got what we needed there. But then the governor ultimately did veto that bill. So I'm calling this one a double win because frankly, I think this is, even with the exemption, was still kind of a challenging concept to put into law. So, um, I'm not going to count it twice for purposes of the batting average down the road, but I just think, a double win is rare. Finally, we took an amend position on the AI bill. This was Senate Bill 189. So we'll take a trip down memory lane. In 2024, the legislature passed Senate Bill 205. It was the first attempt by a state to regulate artificial intelligence. We were the first to pass that bill. We were in a race with Connecticut. It was sort of a majority leader here carrying the bill against the majority leader in Connecticut to see who could get it done first. The governor had threatened to veto all along, and then let's just say he had to make a commitment to sign it, given sort of the politics of the last week of session. So he signed the bill, but he essentially had the attorney general, the majority leader, and the governor all signed a letter saying that they would address sort of concerns in the next session or down the road. The 2025 session came around. The bill to fix it died in the last 4 days of session. Just couldn't get it done. And then we had a special session. We were down to the wire on that one. There was a deal in principle from some of the opponents and some of the proponents to pass a bill that could fix Senate Bill 205. Once the world saw the deal in principle, even the bulleted form, it was fun to watch. The lobbyists for kind of the big tech, big AI folks. So, Amazon, Google, Meta, those folks, they saw the deal and concept on a piece of paper and they swarmed to the Senate chamber and started handing out business cards to members to say, no, 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 no. And so ultimately that failed. And then this year was kind of the last attempt to get something done before Senate Bill 205 would go into effect. And I say it's a win question mark because yes, they did pass and the governor signed a bill that repealed 205 and then reenacted certain concepts of it. Um, I think I'll go into it here in a second. It is an improvement generally. It's more of a notification bill rather than sort of a substantive restriction bill. But I think there are some questions that, the mortgage lending industry has in terms of how it works. And so I would strongly encourage folks to look at this bill, have whatever compliance folks you have look at this bill, have any sort of legal departments look at this bill, because I think, it's one of those that is kind of a decision tree type of bill. It's kind of littered with if this, then this, or if this, then that. And so you have to kind of follow these lines all around it. And there are some encouraging pieces in it that I think help the industry. But again, I would strongly encourage folks to review it and take a look and see and make sure that you can comply with it. The other thing I would note again before I get into detail is the Attorney General's office is beginning a rulemaking process on this bill. And so to the extent you have feedback or you think that, potentially there could be some rules that would tighten this up a little bit or, address some of those questions, I would suggest being involved in that. The CMLA is going to be involved in that rulemaking process, as is the National Mortgage Bankers Association. But I think, it's important to be paying attention to this process because the rules can also have a substantial impact on how companies comply. So, what does it do? Senate Bill 189 requires developers and deployers to make certain disclosures when ADMT or automated decision-making technology is used. And that technology uses personal information and computation to predict, classify, rank, score, or otherwise assist in making a decision or determination concerning a person in a covered domain. So what does that mean for you all? Real estate transactions is one of the listed covered domains. So you make a loan and you're using automated decision-making technology, you must comply with this bill. Before deployers use an ADMT to materially influence a consequential decision, they must notify consumers that the decision uses ADMT. If ADMT results in an adverse outcome, as defined in the bill, so a decline, Deployers must provide information to the consumer within 30 calendar days. That information includes a description of the consequential decision and the role that the ADMT played in the decision, instructions for consumers to request additional information about the ADMT, and an explanation of the consumer's right to request personal data and to have meaningful human review of the consequential decision if commercially reasonable. So, for consequential decisions involving access to a credit or relating to education, deployers that are subject to consumer notice or disclosure requirements under existing federal law are in compliance with the bill's disclosure requirements. So, if you, in mortgage lending context, if you have to make disclosures under FICRA and ECOA, there is some avenue for exemption in this bill. My understanding is we do sort of the preemptive notification. We will say to prospective borrowers, hey, we're going to use, technology, whatever verbiage you want to use. Really, we're talking about AUS. But really, what concerned us about this bill was the post adverse action notice. So, what do you have to tell a consumer if the AUS comes back with, a concern or a reason to decline taking on a loan? We tried our best to get additional clarification in there, just a straight exemption under FICRA and ECOA. Um, Two reasons we did not get that. One, the cake was baked, frankly. The governor, after the special session failure, convened a working group that included basically some AI industry folks, and what I would call sort of consumer protection folks. ACLU was involved in that, just to name kind of a big one that everyone probably would recognize, but folks kind of like that. Um, and they, I think, came up with, I want to say, 9 or 10 different drafts of a bill. And by the time they got to that 9 or 10th, they basically said, okay, this is it. They unanimously voted to support with minor modification, meaning like technical changes, but they were not interested. The entire group said we are not making substantive changes to this bill now that it's agreed to by this group. And then the other concern, once we started talking to the kind of consumer protection folks, they said, listen, we hear what you're saying. However, if there's a gap between what FICRA and ECOA require you to disclose to a potential borrower and what we want you to disclose to a potential borrower, we want Colorado law to control and to have to fill in that gap. We don't want those gray areas. We want them to comply. They even went so far as to say, given what's happening at the federal level, we think that there's going to be an appetite to weaken or, water down those federal protections. No matter how many times we told them that it's been this way for decades, those are not changing. They said, yeah, but it could. I heard a lot of Trump, Trump, Trump. And so, it was not a very, the environment was not conducive to a productive conversation in this way. I had a long meeting with the lobbyist for the governor's office who kind of ran this bill, and he said, listen, you've got the FICRA and ECOA stuff in there. There are provisions in there that say if you can't get information, so for our purposes, if Fannie says, I'm not going to tell you how we, create our special sauce, how our AUS makes these determinations, then you don't have to give that information. So I raised the point that there are gray areas in here because there are, frankly. You have the FICRA and ECOA. You have sort of, again, this, if you can't get the information, then you don't have to give it. But is that if you can't get it because you asked and they said no? Is it because federal law precludes them from sharing that, which I don't think it does? So there are just some gray areas in here. There's some ambiguity that, we thought at the end of the day is about as good as we can make it in the world in which we exist. And so we, again, took an amend position, didn't quite get as far as we needed to go on that. But I think it's a win question mark because, again, it's not Senate Bill 205. And so I think it's a step in the right direction. But I will reiterate that the rulemaking is important. So please, 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 if you take anything else, if you take nothing else away from this discussion, look at Senate Bill 189 and, be aware of the rulemaking process and kind of what the final outcome is. Finally, I will move to some bills that we monitored.
Hey, Dieter, real quick
Yeah.
before you leave that one, there was a question in the chat
Oh, can see
on
it.
when we think the rulemaking will be completed. So, do you have a sense of how long the rulemaking process will take? I did put a link in the chat, so if you haven't gone there yet, please do click on the link that I put in the chat. An article on the AG's website that discusses kind of the history of what happened and then inviting feedback. Feedback is due on the rulemaking on July 13th. So from there, Dieter, how long do we think the process will take?
So the State Administrative Procedures Act has timelines that, feedback is by a certain day, proposed notice of proposed rules or a certain deadline, and then proposed rules and then comments. I mean, there's, you know, deadlines in statute that they have to follow. I would expect we see something sort of final in the fall, close to end of year, if not before. So fall would be my best guess when we really start to see something that's probably going to get done and get a sense of what they're going to, do. And then going into effect for the bill in January in 2027.
Very good. And then the question also in the chat on whether or not CMLA will be a part of the rulemaking process. The answer is unequivocally yes, but we also invite individual members to read the bill, as Dieter mentioned, and post comments also. We're in partnership with the Mortgage Bankers Association. They have taken note of nationally that Colorado is setting the tone for how this is likely to play out in many other states. So MBA has been a great partner for us on this topic, and they're going to be very involved in the rulemaking process as well.
Right. As I mentioned, we monitored about 10 bills this year. Just a few I want to highlight for, interest. The first one is Senate Bill 155. This is a bill that, again, to use my Terry Jones euphemism, no bad bill goes away. This is kind of part two of a bill that we saw in 2025. Maybe you all don't see it, but on your homeowners insurance policy, there is a fee in there that goes to a mitigation enterprise. And what the fund is for is resilient roofs. You pay a very tiny fee and it goes into a bucket of money, and it's for folks to draw from that fund to put hail resistant roof systems on their homes. That's kind of hail is one of the leading drivers of residential property tax or residential homeowners insurance increases in the state. But if you can get a resilient roof, then you kind of decrease the chances significantly of having to repair or replace that roof after a hail event. And so this bill, as I mentioned, did not pass in 25, came back in 26 because it included a line in there that said that insurance companies could not pass this fee on to their clients. The idea of the bill is that the carriers will pay this fee and it will go into a bucket that folks can draw from. Spoiler alert, all the insurers supported it. So I think that gives you a sense of whether they think they're going to be paying a fee or not. But I'll leave that for another day. But the potential here is some more money available for folks to harden their roofs and thus decrease incidences of claims and hopefully bring, broadly in the aggregate, homeowners insurance rates down. House Bill 1202, this is interesting. It's a bill to strategies to prevent homelessness. And so you may say, well, why would the CMLA be involved in that? Tucked in the bill, way down in there, is a provision that says that local governments could use money that they gather from doc fees or recording fees to put that towards their financial obligations for reducing homelessness. We have been involved in doc fee conversations for years because that, raises the price of a real estate transaction, and we've been concerned about that. We also were involved years ago with a bill that would have standardized those doc fees so as not to have different fee levels in different jurisdictions. We thought consistency was a good thing in the document recording industry. And so we ultimately decided that the you could use this language was not concerning enough to warrant an amend or oppose position. We thought this was just one to watch to make sure that it didn't say, okay, doc fees are now $1,000 and the money is going to be used for homelessness. So again, this is sort of a good monitor, a good example of a monitor situation with a bill that really didn't impact us at all, except for one little piece that we were okay with as it was drafted and had just kept an eye on it as it moved through the process. And so that bill was passed and signed into law. Another one I want to mention, this was one bill out of three that came in response from progressive members to the Big Beautiful Bill, or HR 1, that passed. Colorado tax law is coupled with federal law. So you figure out your federal tax obligation, and then you can kind of basically back into what your state of Colorado tax obligations are. Um, this would have decoupled provisions of state law with federal law because these progressives said, well, wait a minute, that's not fair that you're getting a tax break at the federal level and we don't have any money at the state level. And so you shouldn't get basically a double break. So there were three bills that kind of all did similar things, different provisions of the tax code. House Bill 1222 was one that would have decoupled provisions from business taxes. And sort of the initial concern, initial thought was, perhaps not necessarily from a home lending perspective, but just from a business operations standpoint, this would have made business more expensive in Colorado. You as a business wouldn't have received a tax break that you otherwise would have been entitled to had we kept state tax law coupled with federal law. We ran that by some folks who said, yeah, this is concerning, but we don't think this is really an issue for the CMLA itself to weigh in on. And so we monitored that bill again because it's a concern for the industry, but perhaps not something that is directly impactful to home lending. And so we monitored that bill, and the governor did veto that bill. Or no, actually, excuse me, it died in the Senate. So because it was facing a veto from the governor. So that bill died, but I would not be shocked if progressives bring something like that back again next year. We suggested some amendments to and ultimately received some changes to a bill to modify the Public Trustee Act. Again, nothing, no big policy changes, just more updates and tweaks. We did monitor a bill protecting homeowners and their data privacy in the insurance space. The insurance industry absolutely hated that bill and said, we won't be able to do business in Colorado anymore. Not a one that we felt the need to weigh in on, mostly because it was going to die, and so we felt good we could just monitor that one. And we did in Colorado pass a Uniform Mortgage Modification Act. We monitored this one as well. This is a bill coming from the Uniform Law Commission, so it's a group of folks that try to introduce and pass the same or very substantially similar bills in all the states to kind of keep some uniformity in some of these areas. We really didn't have many substantive issues one way or the other with this bill. We thought, kind of, okay, go for it. Again, in the monitor space, because we wanted to make sure, with that title, including the word mortgage in the bill title, we just want to make sure that that one is in a good place. So monitored that one, and that one did get signed. So all in all, we took, again, active positions on 13 bills. So that's support, oppose, or amend. We got our desired outcome on what I'm calling nine and a half of those, for a success rate this year of 73%, which I think is historically slightly lower than the average. But I'll just go ahead and say in this legislature, I think that's pretty darn good. And frankly, if the Colorado Rockies could bat 73%, they'd be in great shape and I'd be making millions. So I will pause there. Happy to answer questions, or if you guys want to discuss other bills, or I actually, yeah, I'll pause there and then we'll talk about kind of next steps for the summer and heading into the 2027 session.
Hey, Dieter, question for you on so on the surveillance bill, did that pass or that was vetoed, I
It was,
guess?
yep,
And
veto.
so if I understand correctly, companies can now kind of do surveillance pricing?
Yes. It doesn't change anything. So status quo is still status quo.
Okay.
It would have limited substantially the ability for companies to price things based on sort of an individual's specific context. Again, absent some exemption, maybe for like a credit report. And as amended, we were out of it, so wouldn't have really impacted the mortgage lending industry, but it was vetoed. So status quo is the law of the land.
Okay.
Okay. Well, we can do more questions in a minute. So over the summer, this is an election year. We are joining with our friends at the Land Title Association to interview candidates for the General Assembly. We are doing it after the primary. Reminder, the primary is in a week, so please, please, please send your ballots in. Reminder, you can vote for, if you're unaffiliated, vote for the Republican ballot or the Democratic ballot. You cannot do both. So please, 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 if you have not already, please consider voting in the primary. We will have the general election again in November of this year, and so we are meeting those candidates in July. It's a 2-day event. Christine and I will be having the exact same conversation, I don't know, 10, 15 times. Terry, it's the same exact thing over and over and over again. But we like to say that when their hands are out, their minds are open. So this is the time to, show up and build those relationships with folks, tell them a little bit about the industry, give them a contribution, and like I say, start that relationship off strong. So we're doing that after the primaries, and sort of as is our way, we are interviewing candidates that we think are more likely than not going to succeed. We're not really playing in races that are going to be sort of a coin toss. These are ones where we know these folks are going to win both on the Republican and Democratic side. And so we want to start off strong. We will ask some questions about sort of their, background knowledge of the industry, kind of where they stand on some general industry issues, and then really, again, build that relationship. So that happens mid-July. We may do some more, later in the year, depending on how things are going. But this is the point at which I would strongly encourage and beg and ask and plead to consider making a contribution to the CMLA PAC. That is how we really start those relationships with legislators. They can raise $450 or so dollars. And so, if we can give them a max check, that's, a great way to start that relationship. And so then when I go, have to twist their arm in January, it's not introducing myself, but saying, yeah, hey, remember we had that meeting in July and we had that really good conversation and we talked about the importance of the, residential home lending industry in the state. And we want to talk about affordability and home ownership and that great opportunity that presents for folks. Need you to, be a no on this bill, or, hey, this is a great idea you've got. Let's get it done. How can I help you? It's important to start that conversation from a place of having known them and, sort of demonstrated your commitment to their candidacy. So, again, begging, pleading to please consider doing that. We can get you the info to make a contribution if you are so inclined. The other thing that happens over the summer is stakeholder meetings. So legislators that are either incumbents in the Senate that are not up for election yet, or folks in incredibly safe races in the House that are starting to think about their legislative agenda already. We'll meet with them and hear what wonderful ideas they have. Other times it's stakeholder groups, so maybe it's not a legislator, but the realtors or bankers or land title or the bar association, treasurers, trustees, assessors, kind of folks in our world or outside of it. Surveillance pricing is one that we were in those meetings, not because it was targeted at the mortgage lending industry, but because, we price things individually. So we'll have big meetings like that and kind of hear what wonderful ideas they've got. So a lot of stakeholder meetings. There are not many at all interim committee meetings this year. Typically, we have some committees that meet over the summer to hear issues and then discuss bills that they want to introduce as a committee. We shelved those for the most part because of budget constraints, but the Joint Budget Committee is meeting and hearing revenue forecasts for next year already. We just had one last week, I guess. So the JBC will be meeting candidate meetings, and then that takes us into November. We've got all of the constitutional offices statewide are open, and control of the legislature is open. I do not foresee in any way, shape, or form Democrats losing control of the legislature. I think the question that we will all have is whether the Democrats are able to secure a supermajority of the legislature. They're currently one vote short in either chamber. So one more Democrat in each chamber would give them a supermajority. That is important, number one, just because the margin is so much bigger. It's very, very, very challenging to kill bad bills with margins like that. But also it gives them much more control over the calendar. So really doesn't impact you all so much as, my patience and hairline down at the Capitol, but also would give them the ability to potentially override a gubernatorial veto. If they have two-thirds in each chamber and all the Democrats hang together, they could override a veto, which, vetoes have actually saved us a couple of times in the last few years. And if they have a supermajority, just for fun facts for everybody, so when you do your trivia nights, if this question comes up, you'll know. They are able to, with supermajorities, refer constitutional measures to the ballot. So currently, they can refer just with a simple majority a statutory change to the ballot. This would give them the ability to refer constitutional changes, and constitutional changes are much harder to pass because you have to get signatures in each of the 35 Senate districts and typically raise a ton of money to do that and get it passed. And you need 55% of the vote to put something in the Constitution. So those are hard to do and they cost a lot of money. And so folks that want to change the Constitution would have a much cheaper, easier path to do that through the legislature and just put them on the ballot automatically rather than have to go through all the rigmarole. So that supermajority is important. So we'll keep an eye on that. I think just prognosticating, thinking, the Democratic side, you have U.S. Senator Michael Bennet is running against current AG Phil Weiser. I think that the conventional wisdom early on was that Bennett was just going to steamroll through the primary and become governor. I still think that has a better shot to win the primary than Weiser, but Weiser is raising a ton of money. He's keeping up pace on the fundraising. He's doing advertising. And so that race is, I think, a lot closer than folks expected a few months ago. And then on the Republican side, you've got State Senator Barb Kirkmeyer, State Representative Scott Bottoms, and then Victor Marks, first-time candidate for office. Kirkmeyer is kind of the moderate-ish in the race, as moderate as a Republican in the legislature is these days. And then Bottoms is as conservative as it gets in the legislature. And then Victor Marks is kind of all over the place, I would say. Had some very interesting interview with Kyle Clark, if folks saw that. Some interesting candidate, I guess I'll say. I think Marks is probably the favorite in the race because of the money he's raising. I think Barb is, kind of a victim of being labeled as a rhino in the Republican primary. And Bottoms is, I don't think, raising enough money to really be as competitive as he could be. So we'll see. My guess, for what it's worth at this point, is probably a Bennett versus Marks race for governor. And I think then you will see Michael Bennet be the governor in Colorado. But the AG's office is also important. I'd encourage folks to pay attention to that one. There are four candidates in the Democratic primary. Winner of that's probably going to be the AG. So another race to pay attention to, just because the AG's office does have some, relevance to the industry in terms of both the bills that they run at the Capitol, but also their rulemaking powers and their enforcement powers. So another race to pay very close attention to when you get your general election ballot and your primary ballot that you have. So I'm going to stop my guessing now, but happy to answer questions or discuss other issues. I need a question while I look up this bill.
Hey, Dieter, it's Cheryl.
Hey, Cheryl.
I put in the comments that it's CE season again for loan officers, so be ready for my phone call.
I have, all the time for you, Cheryl. Happy to do it.
Awesome. Awesome.
Arbitration. Oh, sorry, go ahead.
Thanks.
Yep. Happy to do it. Arbitration reform was vetoed, passed the legislature, but was vetoed by the governor.
Thank you.
All right. Well, that was quite a whirlwind. Dieter, thank you so much for that recap. As you can see, there's a lot that goes on in our industry, and to a large degree, our group stays focused on the issues that are going to directly impact lending, but we also pay attention to issues that are going to impact us as employers and business operators. While we didn't put as much focus this session on some of those topics from the latter, we definitely did pay attention. I'm going to also underscore what Dieter was mentioning about the importance of the monetary contributions to the PACs that CMLA participates in. So we really need you to vote not only with your ballots and with your phone calls, but also with your dollars. Those dollars do have an impact on the work that we do. Money matters. It matters a lot, and it's important that we show a strong support when we can. So, um, Deb, are there any announcements from the CMLA that you want us to make mention of while we have the group convened here?
Well, I do believe you have a golf tournament coming up on August 18th, so please watch for all of that. And I would just like to say thank you, Christine. Thank you, Dieter, and thank you to your entire advocacy committee because you're doing important work. And we would love for all folks at CMLA to know the good things that you're doing. So thank you so much.
We had a really good teacher here in Terry Jones, so super grateful for the bar that he set high for all of us.
Amen to that.
Ditto.
All right. Well, thank you all for your time today. We appreciate you investing a portion of your day in this really critical work that is done on behalf of our industry through the CMLA advocacy. And with that, I think we'll say thank you to everyone and go out and do good things.
Thanks, everybody.
Thank
Thanks,
you.
everyone.
Have a good day.